Hey everyone, Douglas here, and welcome back to the MMT Macro Trader and our Wednesday live stream. Welcome everyone as we settle on in for another exciting Wednesday evening, or no matter where you're at in the world, Wednesday morning, or whenever you're listening, Wednesday afternoon, Thursday morning. Welcome everyone. We have a lot.
Thursday lunchtime
for Bijou. Yes, an international program.
Sorry, guys.
We got a lot to cover. A lot has happened in the last week since we hit end on the stream. We've seen a handful of banks collapse. We've seen markets in turmoil. Along the way, we've seen some really interesting data as well roll out from an economic standpoint, and we'll be touching on it all tonight. So if you're just rolling in, make sure you hit that like button, and if somehow you're not subscribed, get subscribed, all that good sort of stuff. But welcome aboard, everybody. Say hi in the chat if you're here. Let us know that you are here, and we'll have a good live stream. Put questions in the chat, all that good stuff. And we can get going. Right out of the gate, I got to tell you a funny story, Bijou. As it turns out, we are now in daylight savings time, but New Zealand is on a slightly different schedule. So I'm messaging Bijou, hey, we usually get chatting about 30 minutes before we go live, and it's about 15 minutes till go live. And hey, Bijou, I'll be on in just a second. And Bijou's like, I'm eating my lunch right now. And it dawned on me, oh my God.
I was thinking you were so early. Like, what's up, man?
I got a lot to prep. This past week.
And then I'm starting to panic.
Yeah. This past week's been a bit of a markets aside, a bit of a roller coaster for me. I just haven't had much time to even get much work done from beyond what needs to get done for the MMT macro stuff. Some of the deeper stuff I'd like to do. So I've been a little radio silence, at least with Bijou. So yeah, he's probably like, Doug really wants to get going at this an hour and a half early, but we're back at it. I'm excited to be back at it for another hopefully thrilling evening of MMT and all things MMT and macro. Bijou, how was your week, man? He's eating. I caught him. I caught him with his mouth full. He's still lunchtime.
I was still struggling with a little bit with some of the style sheets on the dashboards, and I was actually having a look at other options as well, just in case. I want it to work smoothly without too many. I want to be able to maybe get it on GitHub and then so automatically update it just using Git. And I got onto a bit of a physics thread. Got into this discussion late at night with some really crazy physics guy. One of the really really out there ones. He's privately funded, so that's always a bit of a red flag. And what else? Just other reading, trying to sort of get my head around the SVB collapse stuff. And the more you read from the press, the more confused, the less you know.
Yeah, I agree.
And then it's like solvency, it's liquidity, blah blah blah. Libertarians all outraged, they're getting bailouts or whatever, and I'm like, what's the public purpose here? What's the bank actually doing? What are they supposed to be doing? Funding startups. Okay, some of the startups are a bit wacky and not real things. Vaporware. And so you're going to get into trouble with all of that. But there's no, if someone gives you deposits, I'm probably taking away a lot of your talking points.
No.
But if someone gives you deposits in fair, good faith, it's their money that they've, it's real money. They give you the deposit, you hold on to it. Yep. It should be just 100% insured. As put all the liabilities on the banks on their assets. What they can hold and what they can't.
Yep.
Anyway, so you've got the old Mosler article teed up.
We'll be going over that. I know Bijou, Josh. I mean, I'm glad you brought up Nathan Tankis's write-up. I'm sure he's got probably the best take right now out there. I haven't had a chance to read it. I think Bijou read through it, so he might be able to comment on it a bit. But yeah, we'll be talking certainly the SVB situation. Yeah,
Nathan's good on the law, so he's interested in what legally can the FDIC and Fed do to it's mainly the depositors that you want to make sure that they don't go under and lose real cash, and what they can legally do, and it's quite interesting.
Nicholas Goldget, actually I'll tell you what, if there is, I haven't actually seen, I think gold popped for a little while, but then didn't it come back down? I'm looking on my phone right now on gold futures to see where we're at. Okay, we did. Oh yeah, we got a nice, very healthy pop. Still not above the highs back in February, but a nice healthy pop over the last few days. I'll tell you what, when it comes to gold, the last few days is exactly why you don't want a currency that's backed by anything.
By anything.
Yeah.
Not even tax liabilities.
Yeah. We'd be in rough shape right now if we had. That's not to say that gold might not be an investment asset worthy of purchasing.
I just don't want it to go up and down arbitrarily by some market forces. Want your currency to be sort of stable.
Yeah. Well, I guess the thing would be, in order for the Fed to do what they need to do okay, actually I want to take a step back. Correct me if I'm wrong here. Maybe my thinking's off, but isn't this what the Fed wanted? Like, isn't this a pathway to just massive unemployment and deflation?
That's right? What I've been thinking. They unemployed a few bankers there.
Yeah, why is the Fed stopping in, man? We could be at like 10% unemployment.
That's what the libertarians are sort of going on about. Yeah, let them fail.
Yeah.
Crazy stuff.
I really think this is a pathway. This whole situation, this is what I kind of give you what I've been telling the subscribers to the Patreon, and just kind of how I'm thinking about this. And I've been making this public here too as well. But I gotta imagine, maybe not, but I gotta imagine the Fed has a hankering to get back to like zero rates, right? I have to imagine they just feel more. Maybe they don't. Jay Powell is quickly turning into an imbecile. Really, he never seemed too out there, but certainly over the last, since the rate hike cycle, now into this debacle, I really lost any trust that he will operate.
Victim of the circumstances in a way.
Yeah.
You could get into the Fed chair, be an imbecile, but just be in there for a term where it's all just sort of fairly stable. No pandemics or major flooding, earthquakes, or asteroid strikes, and then you're good.
Yes.
Look back and say, well, I was a great Fed chairman.
Yeah.
It's like total luck.
Ghost on the half shelf, turning into an imbecile. Not a natural talent. That's pretty good.
It's hard when you have a very good education and all the credentials and everything. And what are you just gonna throw out your education and learning from all the textbooks and the professors and so-called experts? You're gonna just throw that out. It's like I say, he's a victim of his own circumstances. He looks like an imbecile to us, okay. But are you gonna actually tell me that he really is it?
Okay,
he's going against his own textbook learning or something.
Here's the thing, right? Here's the thing. What was the response that they did with SVB? They secured the depositors, right? So they came in and did, not stealth QE, but enough asset swaps to make sure the depositors were going to be made whole, right?
Yep.
It sounds like their next response might be to take their foot off the gas with the rate hikes, right?
I don't know. Do you think?
Well, I don't know. That's what we're going to find out. But I guess at least the first step, is counterproductive to the larger.
Did they unemploy the right people though?
Well, probably not. The people they're unemploying are probably way too wealthy. We would. Yeah, exactly. We would hate to punish those in the in circle, but it does. I don't. it just seems like the Fed could have got everything they wanted in very short order. Yeah.
Well, you need to turn it into a bit of an epidemic, right? Or let it run through the system or something. I don't know. Yeah, but then they'd get just totally harassed by others. And
correct.
So
it's I guess the point I'm making is, you remember that analogy I had when, like, the coach wants to get everyone equal playing time, but when the crisis hits, like, you really see how they actually view the game, right? So we got the crisis to hit, and what did they do? They obviously they didn't bail the bank out, but they bailed the deposit out. So they understood, right? I mean, they understood. But then it begs the question: why the hell is the Fed doing what they're doing in the first place with the rate hikes, right? Like, I mean, if the outcome is that you're going to make small regional banks a little stressed out because they have too much duration risk, because that's the only way they can compete with the larger banks, right?
Right.
And you're just going to put them out of business, and that's the end game, right? Like, it's very clear higher rates is not decreasing demand. We'll get into that later tonight. I mean, I'll kick that dead horse. I'll be that dead horse.
Oh yeah. Worth repeating. Yeah.
It's definitely not creating any more unemployment, right? I mean, it's just giving the whole free income, free lunch to those who have money. So this is the one avenue at which you could possibly generate unemployment, right? Create a banking crisis.
Yeah.
And now they're
the most direct. Yeah.
Yeah.
And then everyone's like, oh no, they're creating unemployment like they promised.
Yes. Yeah.
Oh no. It's so bad.
Ghost, I agree. So many people, and Elizabeth Warren can be a little, some of the ragging on the rich stuff just to me doesn't it doesn't land well with me personally, because I just think it misses the point. But there are a lot of people ragging on her on Twitter about what she's asking. But I mean, I agree. Like, you're attempting to create unemployment. Like, what what the hell? I think that's absolutely the right question to be asking here from a social standpoint, and from right, like.
Is that what Warren was grilling them about? It's like, why are you using unemployment to combat supply shock inflation? Is that the way she phrased it?
Yeah.
Yeah, well, that's good. Yeah, good.
Yeah. Sorry everybody about the time change stuff. You're not the only one if you're coming in late.
Yeah, it got me.
Got us all, really. We realized it about 15 minutes before go live. But so the Fed almost had what they wanted, but they pulled out, and they decided they didn't want it. So yeah, we have that going on tonight to discuss. I don't know. I mean, Bijou, do you have any other thoughts to kind of keep us rolling on the front? You read Nathan Tankis's article, right?
Yeah, I read his article. He goes into collateral policy and that sort of thing as well. So why SVB or other banks might have collapsed. Let me see. So he uses it really as a way to give about 5. I think he notes 5 of his sort of MMT take type of points. So it's more of it's less of a getting into the weeds about what SVB was doing and whether it was a bit dodgy, some of their financing. They weren't pricing the risks all that well. Maybe you were a bit maverick, but he doesn't go into that too much. It's more about the law. What can the Fed do?
Okay.
In a roundabout way, it's basically kind of like suggesting Warren's proposal for the banking system.
Okay.
But a bit more narrow. So yeah, it goes about the points back to previous writing of his on collateral policy. That's actually one area of discretion that the Fed has. What they determine or what they say that banks can use as collateral. So you can tighten monetary policy not with interest rates, but with collateral policy.
Yeah.
And so I thought that sounds like a sensible idea to me.
Yeah.
And that would actually tighten up lending rather than try to use the interest rate as the blunt weapon. And then he goes on about how there's no problem with the currency issuer to give small banks, especially the small banks who have higher marginal costs, and trying to chase getting deposits. There's no need for that. That they can be given unsecured loans from the Fed. Since it's just score points. It's just score points. And what's the public purpose is that allow the banks that are there in place serving a private and public purpose to run the payment system and to analyze credit risk. And you just undermine them if you allow them to do all sorts of crazy speculation or own very volatile assets. There's no need for any of that. And you can just 100% insure deposits and give them unsecured loans, it's kind of I guess those are the two main points. But Nathan goes into more of the legal stuff, like what legally could they do right now to keep confidence in the banking system. And it's not like there's going to be runs on banks because people are going to take out their cash because they're worried about it. But there's maybe a little bit of that false psychology, but it's more about technical stuff about not causing too much of a disturbance. And it goes through some of the policy. And the hilarious thing about Nathan's article is that he and Rowan Gray wrote about this a while back, what the Fed could do, and it turns out that the policymakers are doing what Nathan and Rowan suggested. Suggested. So he's saying their research agenda has been completely vindicated, and everyone's following them now. So that was pretty cool.
Good, yeah. I mean, it is kind of, again, we're having a major banking crisis. Not a major, but I mean, we're having at least at the very moment a localized banking crisis that could turn into something more. But at least we're not being told that this is going to become Greece and yada yada yada, and the rhetoric that came out during 2008. So I mean, I would say one small step for society going forward. Not that we can't do better.
Yeah, maybe.
But it could have, if this was 2008, I think we replay 2008. The potential for
every crisis is a learning opportunity, and
I
think every crisis MMT thought has made a little bit of an inroad.
Yep.
But it's like a little bit at a time.
Yeah. We just need more crises.
More crises.
Let's see. There were a few other things that I did want to think through regarding SVB. Credit Suisse sounds like they're on the chopping block next as well. Just so, listen, I'm sure we've all looked into this thoroughly. I'm sure we all have our own opinions and our own thoughts.
I'm a total expert on it all.
Yeah. But so everyone knows kind of where at least I'm coming from at this point. I mean, here's my too long didn't read summary of what's going on. I mean, it really just sounds like a handful of banks had way too much exposure to duration, and they caught up with them and deposit. This is what's going to be key. This is one of the things I do want to hit on tonight. That I think is, as like the one insight that I have that I haven't seen anyone else have that makes sense in my MMT mind. But it does seem like there was and I'm curious to see if and when Credit Suisse blows up, what we can end up finding out. But it seems like there is a higher demand for cash than banks were anticipating. And this is really intriguing to me, because that's something that I think would be counterintuitive,
given to
the mainstream, but makes a lot of sense to me. And maybe my explanation for it isn't the correct explanation, but
have a go at it anyway.
Yeah. So let's do that. Let's pull up.
Can you? Oh, damn! I want to just close my doors and clear my lunch away, but in case I start thrashing my hands around wildly, might spill over. So.
If you need to, go ahead.
I'll just be a tick, but certainly don't wait for me. I'll come back and I'll ask you.
I mean, the good news is we don't have our normal lineup of our numbers are still kind of ticking higher, and I think that's because of the thing. So we actually have some time. So go ahead and go
Okay,
do that.
then.
And I've got a story for everyone else. Well, he is away. And my story is quite simple. I'm running on half the RAM that I am last week. My computer, I freaked out. My computer shut down on Friday. And after about an hour of just swapping components out, I got it back up and running. Don't know what got it back. If you're into computers, you'll understand what I'm about to say. I couldn't even get it to post. I couldn't even get it into post. Swapped out components for a while, and then eventually it started working again. I had a slight heart attack because I have a video card that's one meant for gaming, and then two also meant for deep learning. It has compute cores that are really effective for deep learning, and I had swapped out to just to an extra video card that I have laying around, and it worked after I swapped it out. But as it turns out, it looks like it's actually a stick of memory. So I'm running on half my memory. Now, when I'm producing this thing, I have a crap ton of stuff open. So I'm hoping tonight that running on only half the memory on my PC can handle everything that I'm doing, and that we don't end up crashing halfway into this. But yeah, that was my Friday. It started off half the week, or the kind of the bad week, at least on Friday. Let's see. Before Bijou gets back, what else? What else can I tell you? Ghost on the Half Shelf. It lost money on its sales. Whoops. Oh, you're talking about SVB. Yeah, because venture capitalist cash dried up, forcing tech to draw cash down, and SVB invested in interest rate sensitive assets. So, yeah, let me just switch to that, and then when Bijou gets back, I can kind of repeat what I was going to say. So here's the slide deck they put out like a day or two before they blew up, I believe. Yeah, and to back up too, I blame the SVB situation. I'm going to say like 80% on the Fed, and I could change. It could be 50-50, and it could end up being SVB more than the Fed. But it just seems to me like the Fed has made some cockamamie rules, set some cockamamie goals, and there are some poorly thought through regulations that really just put banks in a bad spot. I'm not saying there aren't some banks that absolutely deserve what's happening to them, and bankers that deserve what are happening to them, but the Fed and regulators throughout the years, going all the way back to like the COVID stimulus checks that went out, and just this massive influx of reserves that hit the banking system as all those checks hit, and the regulations that are in place for leverage, the leverage ratios on the balance sheets of banks, right, and their inability to hold on to these this sudden influx of reserves, right? I mean, that's, so then the Fed has to create the reverse repo facility to take care of that, right? I mean, we keep seeing the Fed, the Treasury, and policymakers and regulators just constantly be like, "Oh, I didn't realize that was going to happen if we did that. Let's create some stupid vehicle to take care of it." So, Bijou, right now, what I'm explaining is that I don't. It's hard for me to fully fault SVB, and that I think a lot of the fault actually is at the foot of the Fed. And I'm not saying that bankers can't be scummy. I'm just saying that they're playing a game that they're bound to lose at, and they also have the rule makers who don't realize that banks are there to serve the public purpose first and foremost. So they're making rules that just make everyone's life more miserable. So that's
what was your analysis of SVB?
I would. Oh yeah, my
sorry to repeat.
Yeah, my cliff note too long didn't read is that they had too much duration risk. They bought the long end of the curve, and they, because of this unanticipated cash burn, which is the slide that I have up from one of their slide decks they had out recently made them sell some of their assets, and there was a run on the bank because Peter Thiel realized that they might not have the cash on hand, and it kind of got out of hand. So that's my take.
Yeah, sounds right.
Okay.
So yeah, I mean, I haven't looked at it in depth because I don't know.
So what?
I've been a bit busy.
Yeah.
Go ahead.
I've gone over this before, what I'm about to go over, but I'll go over it again. Actually, it came up in the Patreon Discord server as well. But give me a second. So SVB, before they blew up, put out this slide deck that said that the cash burn was 2 times higher than pre-2021 levels and far exceeded their expectations, right? And the argument makes sense up to a point, right? I mean, obviously they're going to set some expectation somewhere in the fine print. They explain kind of how they determine their expectation, but it's this constant things are bigger, hotter, larger than expectation that's going on right now. And so why were expectations off so much, right? Like I get that their explanation is that there was a massive cash drawdown because the economic activity was a lot worse for tech startups. They needed to draw down their cash. Fair enough, right? Let's just say it's the case. But why were their expectations off so much, right? Like they know what the flows normally are, right? And they have models to predict what flows should be based on based on whatever the relative economic indicator is, right? Wherever that happens to be at any given time. And I would assume interest rates are one of the biggies, right? So why were they so off on this demand for cash, right? And this, do you know where I'm going with this? Have you pieced together where I'm going with this? It all goes back to this idea that I really think interest rates just make the currency hot. I mean, I think high interest rates drives the velocity of money. I'll put this together again. I mean, I know I've done this many times in the live stream, but I think it bears repeating that the decade that we saw of dropping velocity in money, I think one of that is going to be the repayment of the repayment of the massive credit boom that we saw during the 90s and the aughts. But I also think that a 0% interest rate policy just brings down the velocity of money, and that a higher interest rate increases the velocity of money because the term structure prices and it's supplying the additional cash to chase after that higher term structure prices. And I would imagine that SVB, their analysts, were like, oh yeah, we're going to have a slowdown in growth. We're gonna see a slowdown in growth. We have our models that anticipate that growth will go down because interest rates are at this level. But what they don't account for that is this interest rate thing, and all of a sudden the demand for cash is just so much higher. And it's not because these startups are doing worse than anticipated. I just think there's just a need for cash. The money gets hot. You got to buy things. You got to buy things today because it's going to be more expensive tomorrow.
Exactly.
Josh, I don't know if Warren's connected the dots the way I have. I don't think I mentioned it to him on the live stream, but I should bring it up. I mean, I next time I talk to him, I will to see if it makes sense for him as well. So that's my thought. Those are my thoughts. Those are my thoughts.
Yeah, that's kind of. I'd agree with that. I'd hazard to guess that Warren would probably agree with that analysis too. You're making cash a little bit hot. People want to take it out. I don't know what. I don't have this mindset, but imagine if you were a gold bug, you might want to take out some cash to get your gold. If you think inflation is going to keep pressuring prices, and so, but that's just the naive thinking. But for all sorts of similar reasons, I think it does make whole like hanging on to cash a little bit less desirable, and you want to sort of start to spend before prices go up. And big macro effects though. So it's like I can sort of understand that a business or a firm who has microeconomic thinking maybe doesn't even have these proper macro models. I mean, in a way, we kind of know if they're just working off mainstream models, they don't have the macro sorted, and you only need to be off in one kind of metric to to make a really bad decision with your long positions.
Yes. So I would say they're doing it at a micro level, right? I mean, they are anticipating their needs, but
their own,
when the cost of borrowing, undoubtedly, the cost of borrowing goes up, right? I got to read Hamel's comment here, but the hot money can't leave bank balance sheets in aggregate. I got to think that through as I'm going to make the next point.
I don't know. Unless you take out cash as notes.
Yeah.
Yeah, but if you're withdrawing it to spend it, it just goes into another bank.
Into the other bank, yeah.
So maybe that's a bit of what he's.
I get what he's saying.
Experiencing as well.
Yeah, okay, but I guess what I'm saying, Hamel, and maybe we're saying the same thing. I don't know, but I guess what I'm saying is, I mean, effectively the turnover of money, right, is what's speeding up.
Yeah.
Right. Oh, I get what you're saying though, Hamel. It doesn't matter if the turnover of money, because they would also be receiving deposits just as fast as those deposits are going out. But I think that churns in cycles, right? Like the swimming, right? The swimming pool would go level would up and down, up and down, up and down, as it churns through cycles in each bank, though, right?
And it takes a while to come back to SVB.
Yeah.
There's always some delays.
Yeah, Hamel, that is a good point though. So I guess, it's interesting to me, just to summarize, it is interesting to me that at the very least, there's this demand, this kind of hotter than anticipated demand for cash. If the full explanation is things are just worse than we thought, I'm not buying that, right? I mean, it just doesn't. I mean, I know they're laying people off and whatnot, but it seems to me like the lack of calculation is that the economy is a lot better than anticipated. It could be that the economy is better than anticipated, and the need for cash for higher costs is making them draw down. Is making them draw down faster than anticipated.
Yeah, I did see one graphic where someone had put up a bit of a comparison of different banks, which was insightful because it showed that SVB had about the same sort of capital assets, but they were just an total outlier on the sort of unrealized losses. They were way down.
Yeah.
So it's like I don't see it as being a systemic banking system risk at the moment. That the quote unquote taxpayer, because after all, that's what everyone's going to gripe about. Oh, the taxpayer's bailing them out again. But that the FDIC and the Fed are going to have to bail out a huge swathe of banks because maybe I don't know what's happening with Credit Suisse, but you can tell me about that later. But it's just that they were an outlier. And any other bank that's gotten themselves into that position and didn't assess the macro correctly, they may also lose a bit of staff or may be put under statutory management as well. But I think I agree with you. It's not, at least at this stage, it's not yet. It's not, the high interest rates haven't really broken things yet.
Yep.
That might be the narrative, but I still think the Fed could go a long way with this lunacy, and we'd have to see.
Keep going.
Did the latest inflation come up too? Is that still? I think it's still the rates are still sustaining the inflation.
Yes.
So, like Warren says, it's like, when does this end? There's no end in sight.
Yeah. Let's see.
Because I agree with you. Unless you're an outlier bank like SBB in the position that they had, then I think you can probably ride out this whole period.
Hamel, here's I can just paste this in chat real quick.
Got ban on cash.
I don't know what the hell that link actually is. Like all the, whatever. It'll bring you to the right spot. CPI percent change from a year ago. Yeah, I mean, we're still pretty elevated, 6% from a year ago. I mean, it's coming down. But I think it was within expectation, what was expected this past month.
Backwards. So if I was that's looking backwards, the CPI. And so I'd just be saying, I'd actually be saying it's fine to go to low rates now. So it's not going to be a problem anyway.
I don't disagree that there was some bloated spending. It's tough. Okay. Here's the tough thing. When it comes to like determining what's the most productive work, right?
Yeah.
I like
we got Chat GPT-4 now.
Oh yeah.
With servers that cannot handle the load. So if you're a user, you don't even get to they're at capacity already, so you don't get to use it.
Yeah. I might finally pony up to 20. I mean, the best $10 a month you can spend is on GitHub Copilot, but might have to do Chat GPT as well. I'm not saying ghost on the shelf. I'm not saying I agree with what I'm about to say, but let me just give the counter argument that we don't know what it is that we want in the future, right? Like in 2005, you didn't know you wanted an iPhone, right? But now we all have, I mean, those of us who know better have Androids, but we all have iPhones, right? We all have iPhones now, and you need the private sector to figure that out, right? And you need a bunch of companies to find out that there's just, as it turns out, what we didn't want was, a Windows phone, right? And we needed to find out that in fact we didn't want to be in the metaverse with Mark Zuckerberg. So to a certain extent, I kind of, I don't know. It's hard for me to come down too hard on some companies. What I wouldn't want to do though is what I wouldn't want to do is have those companies be overly reliant on kind of government handouts, right? I mean, they should fail if they have nothing to offer, and that is something I would absolutely agree with, right? Is that if they're not creating anything, then they just need to just let those people go do something productive. Anyway, those are my thoughts. You can. I'm kind of reading chat. We got some good chat. Coming on into. Anyway, I'll digress.
Yeah, but the way the USA is going about it, it's like it's almost as if they want to make themselves a fully service economy. So you're going to end up being the low-paid servants of the Argentinian and Brazilian oligarchy in their holidays in the Caribbean or whatever. It's going to be Americans serving the drinks instead of the South Americans soon.
Yeah.
If you keep going this way, kind of just like turning into a rentier economy and all that.
It is.
So, why are you just investing in massive cool engineering stuff? Protecting the wetlands. Getting rid of Saudi oil dependency, which every politician can say, and they never act upon actual spending and investment. And it's always, we run out of money, we'll do that next year. Never happens, but it could easily happen. So I mean, it's like just it's, I definitely agree with you that the public sector has doesn't need to get involved in this, propping up the tech sector, and you can let the vaporware just evaporate, and people who think that that's a good risk, they can just go away and drop out. There's a churn in that respect. So yeah, it's like, sure, it's tough for people's families, but I mean, if they're actually unwittingly investing in something very risky in the tech sector, but I guess don't people really just know this already? I mean, I'm not going to invest in any tech startup unless I've got money to lose. Like a venture capital.
Yeah. This is, I mean, Ghost. Your point here, I agree with you 100%. Most of them just got lucky, and and I don't disagree with that. That is,
that's true.
You're absolutely right on that point. And if you do live in Silicon Valley and you've seen it, you're probably a lot less sympathetic to their plight than I am, having seen it all pass. Go over, pass by.
You also might not even want an Android phone. You want to get one of the generic phones and stick Linux on it.
Android is Linux.
Oh, it uses the Linux kernel, but it's Google backends are all shit. You know this. You're just trying to get a rise out of me.
I was hoping for a little more of a rise, but
no. The Google's still spying on you. Freaking turn off that. Take the battery out.
Let's see. There's one up here. There was a quick question up top. Let's see about de-dollarization, which you've hit on a bit in the past, but I'll jump in it real quick. I don't know if I can't find it to highlight it again. This is the next question that I don't want to forget, so I'll highlight that. De-dollarization, I think countries should de-dollarize. I think they should stop issuing loans in the dollar. I don't think it affects the U.S. at all. I think the U.S. might have had a slightly inflated stock market long term because of the whole situation. There'd be an incentive to buy U.S. Financial assets over non-U.S. financial assets because you can sell those in a pinch to get dollars. But in the grand scheme of things,
might make your imports a bit cheaper, so you get a bit of a good ride out of that. When countries dollarize, but it's not going to collapse your system, and you're still going to be able to pay for imports. So definitely, countries should totally dollarize. What? Just makes no sense that they would be on the dollar standard.
I think it's a win-win-win for everybody across the board. I don't even think that it. I mean, London is still the capital of foreign exchange. The foreign exchange markets, right? And they've held on to that for centuries now, just simply because of the legacy of what London was. And I don't think the U.S., if de-dollarization finally happens, now every de-dollarization proposal that I've seen still makes no sense. So it's going to be really hard. And it's also going to be really hard there's 50 years worth of debt, this debt superstructure that's all built on top of the dollar. So it's going to be really hard to get off of the dollar. I mean, it's all, you still owe your debts in dollars globally. So it'll take time.
It's only psychologically hard for the politicians.
Yeah.
But monetary operations is dead easy. So it's a matter of it's unfortunate. I'd say it's unfortunate because the politicians have to first be smart, and then secondly they have to be able to convince their voters that they're doing the right thing, and that any inflation is pretty much going to be one-off. It's not going to affect the real economy. You can look at Argentina with 50% inflation or whatever, and 25% interest rates, plus a lot of them are just taking the money and then converting it to US dollars. It's like, but their GDP is fine. They haven't had to lay off any beef workers or cowboys or anything. So I mean, I mean, it's crazy, but it just it's a good example. Argentina and other countries like that, Turkey, I guess, that they've got it all backwards, but it's actually not hurting their real economy. I mean, maybe it will later. I don't know, because some idiot will come in and impose austerity. So you need smart politicians or a smart, informed electorate that's pressuring the politicians. Well, I don't care which way it goes, but one way or the other. And then you understand that getting off the dollar standard and so forth is just pure psychology.
Yep.
It's a psychological obstacle.
Yep.
Yeah, I do want to go back to carrier pigeons. Are you insulting? Is that an insult? Is he saying Linux is a carrier pigeon? What you get is Linux is less fancy apps. So that's all.
I will admit I still do the vast majority of my work on Windows, but it's really getting stuff to work on Linux. No, actually, no, really.
If you don't have the gaming system, I mean, you can do gaming on Linux fine, but if it's too much of a hassle, well, you've just eliminated a whole lot of useless wasteful activity out of your life.
That was that.
What do you got to say to that?
Yeah, Douglas? That was good.
You can still play poker with your friends. You don't need a computer for that.
Yeah. What was I going to say? Well, while you were gone, the story I was telling everyone is that one of my RAM sticks went bad on Friday while I was gaming, and I didn't know. It didn't actually. My computer crashed. I couldn't get it past post. I was freaking out. I thought it was my video. I thought it was my video card. Actually, I really wasn't freaking out about the video card, because I'm like, this will be a great opportunity to tell my wife I need to blow a couple more $1,000 on a new computer.
Every hardware failure is an opportunity.
Is an opportunity. Exactly. Never let a good crisis go without something. I don't know how it goes.
Something like that.
Yeah. Thanks, Hamel. Hamel's my gamer buddy. He comes in here and supports the gamer class. Yeah, but anyway, I was actually making a video for the Patreon, and it was going super slow, and it dawned on me after I was bouncing components around, and I'm like, yeah, half my memory's gone. So I'm fingers crossed this stream doesn't crash tonight. That I'm not maxing out my RAM. Next question that came up. I'm gonna stop. I'm gonna stop. Yeah. Let's move to the next question that came up. Do you think the Fed? Or do you think the end might come when, if Republicans get their wish of cutting government spending with this debt ceiling fight? Won't be from rates, but a recession might come. Yeah, that makes a lot of sense. I mean, it's an absolute pathway to destruction. One of the things, though, that I think that's worth pointing out, again, going back to this velocity of money thing, this is kind of coming from the Steve Minsky model that he's built. One of the main components is the turnover of money and the speed at which loans get repaid, but particularly that turnover of money that is baked into the way these models work. It really seems to be, and I mean, in reality, we really have 2 recessions to go on, right? That we have like worthwhile data that can actually tell us something that's not, an entire quarter in between prints. But it does look like when you look at the chart from the velocity of money that it's not the acceleration of that velocity of the turnover, but it's when that thing begins to decelerate, that for whatever reason, that's what's putting pressure on kind of the dynamics of the system, and that's what causes the collapse to occur. So I think what will happen is eventually the Fed will take the foot off the gas whenever that finally happens. It could be because of the bank crisis. It could be down the line because of a shock from the debt ceiling. But when they do take their foot off the gas, I think the immediate response will be probably a market rally as the valuation pressure gets effectively unravels. And then we also see the hedging that's taken place over the last year unravel. That'll fire things off to the upside. So as the Fed kind of continues to take their foot off the gas, but it's taking their foot off the gas that will actually be. I apologize if you guys can hear that. I got some kids just wailing outside my door, but I think I hopefully you probably can't hear it. But it'll be that last step that actually that actually kind of pricks the bubble and slows the system down enough. So we could be there. I mean, we could actually be getting there. I mean, we could be getting a perfect storm, and the Fed's like, well, crap, we can't have a bank run, despite that accomplishing the goal.
Yeah.
And so we'll take the foot off the gas. That'll decelerate the velocity of money, and that'll be enough to prick the bubble. And that could be a path. That could be a path. So
could be a path. Yeah, I mean, you stop the trickle down, and then the thing I worry about is that so suppose you've got the GOP sort of pretty much in control, they're going to want to reduce spending regardless of the debt ceiling. So it's not so much the debt ceiling that I worry about. It's like, so suppose the Fed lowers rates, it turns off the spigot, turns off the trickle down. So if you want to support the economy and not have another recession, you got to do trickle up. You got to support wages and workers. And but I don't see the GOP doing that. And so could dry up a whole lot of stuff, right? I think that's the danger, is that because you got the GOP in charge over there, and unless you can get through to another election cycle or something, then it's going to be like, it's not the debt ceiling that's a problem. It's going to be the government spending is going to, well, I don't know if it's going to shut down. I don't know what the non-discretionary spending is, but I'm sure they're not going to just start spending for a Green New Deal or anything just anytime soon. And so it's like, yeah.
It's really funny. What's really funny about the Republicans is, over the last, 30, 40 years, Republicans have, way outspent Democrats when Republicans are in office, right? Like you'll hear Neil deGrasse Tyson talk about how his favorite, I don't know if it's really his favorite, but he says, he'll talk pleasantly about Reagan because Reagan spent so much on NASA, right? And
Star Wars,
space exploration and stuff, and that Republicans consistently outspend Democrats when Republicans in the presidency, right? But the minute they're not in control, spending's the worst thing in the world. So maybe the Republicans have figured it out. They just got to cause a recession so they can get in and spend on the right stuff. Obviously, Bush is Bush is the outlier.
Okay,
there, but,
you're right. That defeats my argument. Maybe the spending will go up, but on the military industrial complex. And that's a different sort of trickle down to other people. So maybe you're right. Maybe it'll be okay in that sense.
But you got to get the crisis first to get the Republican in, right?
Right. You have to get create some sort of crisis. Yeah. Jeez. You're probably right about that. Although I think in recent decades, I think the complexion's changed a little bit. Like you've got more Tea Party type Republicans now.
Correct.
Than Reaganites.
You're right. Yeah.
So they do, I think, have this. I think the Republican Party over there has become a little bit more super stupidly serious about cutting back government spending.
Yeah.
But bring back the Reaganites. It's like, oh God, I don't believe I said that. But we've said infinite government here on MMT Macro Trader before, so you can hear all sorts here on the stream.
What was I going to say? Yeah, it's definitely a path. Definitely a pathway forward. I mean, one thing that is forever certain is that we do have a massive private debt load, and that has implications. And we haven't talked about solvency versus liability. I did give my TLDR tie at the outset. We'll jump back into SVB. I'm sure in a little while.
Did you actually call it? Is it solvency or liquidity issue? How do you see that? I mean, technically they were insolvent, right?
I believe so, right? Yeah. I mean, that's why they.
But also, people were running.
That's why
people
were
running for the deposits. So they had a bit of problem with liquidity as well.
They had
payments.
They had a perceived problem with liquidity, right?
Perceived, okay.
Perceived by the depositors, but I mean, technically they were shut down because they were insolvent, and that is the regulation they broke.
Yeah,
but they were only insolvent, right? Because they had a sudden cash crunch, right? One quick thing. am I still, Bob Knight asked if I'm still long. I never sold anything during this entire time period yet. Amazingly, despite the selling we've seen in bank stocks, I mean, the S&P is still above its February lows.
That's date's a bit hard to see there.
Well, yeah, I'm pulling this up.
The middle of that is 2020.
We're still December. The end of I'm sorry. The December lows. We're still above the end of the lows at the end of last year. So, liquidity. Yeah, I knew what you were talking about. Yeah. I was mixing it up too. Ty. Yeah. I still haven't sold. There seems to be strong support at 3,800. I mean, if 3,800 gave way, that would get a little dicey. I might want to get out of the way. But so far I've held the fiscal flows remain just screaming. I mean, they're finally going to top because we're hitting tax season. We'll have a little cycle here, and then obviously the debt ceiling will be an issue, but I've remained long. I don't get terribly active. I mean, I would call myself an active trader, but I'm definitely not doing what's called swing trading, which is making trades every couple weeks. I mean, if it seems necessary, I will get active, but for the most part, I kind of follow the model and trust that things are going in the direction that I think they will, and kind of build positions from there. So,
yeah, I mean, this whole COVID era, it's been very jittery. And so you've had a whole lot of things sort of slightly decouple, and before they get back into whack, it's really, I don't know. It just seems to me, as an outsider, that you don't want to be trying to make too many second guesses at the moment, and just look at the macro, just look at the flows. Oh yeah, that's a good question. Also, Ghost on the Half Shell made a good point about the Giesel currency from Wurgle. We've talked about that before. Actually, you probably weren't you might not have been on our live stream, but back earlier this year, we talked about the Giesel currency and how it's designed inflation. How about that? It's stamped script, so you devalue it 10% or 12% per annum, but every week your script goes down in value every week, and so you're going to spend it, and it fuels the economy. And the other way to fuel the economy, is with credit growth. So if you talk to Steve Keen, credit definitely is money in the system, until it gets paid off. But the credit cycle just can keep going. You can just keep churning that cycle around as long as there's a sufficient amount of government injection to ultimately pay off interest long term. But once the interest gets paid off, then your credit becomes someone else's income. It can leak off into savings, which allows more credit to be injected without causing any price pressures because someone else is saving. So it definitely drives commerce. I mean, heck of a lot of it, really. So I don't think it's just a correlation. I think if you look at a Steve Keen-Minsky model, credit in an economy where your government isn't just sort of like massively the main source of currency, and you need private banks in that sense. If the government isn't just a sort of a centralized bank, I mean centralized in the fact that in the sense that they're also doing all of the investment, like a sort of state communism or something, then you definitely need credit.
I agree. I agree. From my perspective, the research I specifically do, especially with the deep learning stuff, is there, what I would call forecastability from the credit data into particularly asset prices, and certainly that seems to be the case. So it seems like it is what you would say drive or something like that, right?
Yeah.
So yeah, I think the causal link is there, and I mean my deep learning models can learn from the data. So if there was nothing there, they wouldn't be able to learn. So I'm sufficiently convinced enough to make sizable bets that my wife doesn't like to hear about that I've got it right. So good question.
Yeah, I don't know. I'm not sure about demurrage breaking, replacing tax. I guess any time you've got a mechanism for deval or to reduce purchasing power. So, for instance, with a stamped script, then it effectively is a tax. So it'll drive the currency. So in Virgil in Austria, if you just devalue the script by design, everyone knows how it's going to be devalued, so it's totally fair. And it's like a tax. It's just like a tax. It means because the currency is your main method of payment, you're going to keep wanting to earn it. So it drives the whole system. So yeah, I think it's just another way of saying it's a tax. I mean, tax can be a very generalized concept. If you generalize it, abstract it enough, then any sort of tax will drive a currency. And so it could be just fines or fees or whatever. If they're high enough, they'll drive the currency. But yeah, I haven't looked at free gold stuff. I don't know what that is. Maybe you want to explain that.
We'll have to dig into that this week. Just for the record, if there are any IRS agents watching, yes, I do pay my taxes. That is in fact what I do, and I'm going to gladly hand over the check in a couple weeks here. Let's see. All right. What else did I want to talk about tonight? I've got some other things.
Just quickly looking at that Freigeld or Freegeld. So yeah, it was proposed by Silvio Gesell himself. So yeah, it's in German. Apparently, it means free money. So there you go. I think it's MMT in a way. But, zero interest rates. You can not have it be inflationary and so forth. But there are other things that are a bit strange about it. I'll have to look into it. I don't want to make any further comments because it would be just an ignorance. But if it comes from Silvio Gesell, then I think it's probably worth looking into. Yeah, Frank. Thanks for that anyway.
What was I going to say? One thing we can all agree on, though, is that there's a really good form of inflation that exists that that actually drives unemployment to zero,
Indeed,
and maximizes production and output, and that inflation should be pursued. I think we can. I think you and I would agree on that.
I mean, the way if you want price stability, so neither inflation nor deflation, you just need the currency issuer to actually act like a monopolist and fix prices and let the supply float. So that's what I think Gesell and the Freegeld, I think that's what they understand. And in a sense, it may be not exactly the same as MMT, but it's pretty similar in spirit. Is that if you're a currency monopolist, you can fix price, let supply float. But if you need to distribute or redistribute wealth or the real wealth in some way, you can use the currency to do that as well. So it's not necessarily going to be inflation that you use as a tool, but you could use some prices to adjust relative to other prices. And if that causes a one-off change in the price level overall, that's fine. MMT does, or we would not call that inflation. We'd just call it a regauge one-off.
Yeah.
And so yeah. I mean, I like that. I like all that stuff. It's a sensible way, but you got to people running the monetary system have to understand that they're the monopolist and not act like they're not the monopolist in order to have sensible policy. And then you need a democracy to determine how best to use government investment and the fiscal space that's made available.
I'm loving the conversation going on about Snoop Dogg, Bow Wow, late 90s, early aughts rappers. This
oh, really?
Yeah. That's I'm a Ty Keynes. If I could relive the late '90s, early aughts, that would be. That was my Groundhog Day over and over again. That's really why I want my theory to be right. My understanding of Roger Penrose's Triple C to be right, so I could just relive the late '90s and early aughts.
I keep telling you, it's not reincarnation, man.
Okay, time out. I know it's not reincarnation, right? But I'm just saying that, like, the fact that it could exist, right? I mean, the fact that this reality,
a pattern could repeat. Similarity.
Yeah, this pattern. Yeah. This pattern could repeat again. I think that would be great, and I hope. And I can't even say. I mean, to say future Doug once again gets to relive this is not the correct way to say it. But
But is Snoop Dogg a result of the slavery era? Ultimately, so you don't necessarily want it to relive exactly that way again.
Okay, right? There is a lot of suffering that I would prefer not to take place. So
we could push the black hole evaporation disturbances into the future cosmos, the future aeon, and maybe sort of give them some signals to get rid of that. But in order for that to be a thing, we'd have to understand we can see the signals from the past.
Well, exactly.
As well.
Yeah, and it's not like it's,
tap into it.
Yeah.
And it's like,
no, it's
to get to that level though, you need advanced quantum mechanics and cosmology. So you've already gone through your exploitative slavery, feudal and capitalist eras, and your climate crisis, and you've already got through that. So just saying. I mean, what you can do is once you reach like our aeon's 20th century equivalent, then you can just tell yourself stories that maybe in the future we will get wisdom from the ancients from the previous aeon, and but before we actually can figure out how to get that stuff out of the cosmic microwave background, maybe we should just imagine we got it from them. And make a few fairy stories that tell ourselves, hey, let's do some cool things instead of some war. The power of stories should not be underestimated.
Yeah, Josh, I'm not reliving Marky Mark and the Cool Gang or whatever. It was just, I think Marky Mark was just a little before my time, to be quite honest. I'm looking up because he was like early '90s, right? Before he became Mark Wahlberg. When was it?
What was he?
Marky Mark
before he was.
Marky Mark in the Funky Bunch was 91 to 93. Yeah, I was still pretty young, 91 to 93. I didn't kind of come into my own until the later '90s. God, this live stream's so much fun.
We probably missed a half dozen.
Oh no, they're talking about music and stuff, so we're not missing any questions. As it turns out, this is a topic everyone wants to be talking about. Oh my God, our concurrent viewers is at 5,000. This is let's see. What else? If I switch to my screen, it's going to be a picture of Mark Wahlberg drinking a water bottle right now, because that's what I just looked up. What can we touch on next? It doesn't matter.
I don't know.
It doesn't matter. There was a guy in the early '90s that wanted to be tough. His name was Marky Mark. Started a band.
Right.
It's kind of like an early boy band, and then he became Mark Wahlberg and was kind of embarrassed about his time as a rapper. Let's see. Now, if you call him Marky Mark, I think he tries to beat you up. I did some research. Do you want to see the research I did this week?
Yeah.
This is I think
really, also after that, I just wondered if there are any of the most the banking proposals that you wanted to
we can
look
go
at
to
in
that.
particular. Yeah. I don't know. They all seem sensible to me, but if you wanted to go over them. So what is the research you did?
Big Dog on the way out. My Jesus turned the money chargers tables over again. Yes, I think that is I think that is happening in the repeating Roger Penrose Triple C world. Credit Suisse to borrow up to $54 billion from Swiss National Bank. Headline just came in. Oh, that's probably why stocks are flying high right now. I was just noticing that we were seeing a big boost in a time that is normally zero activity in futures. So nice little pop from stocks. Let's go. Let's see. Ghost on the half shelf. Seems like banks are doing exactly what I suggested. They are loaning to each other to create money, and when the music stops. Ty, let's see the research. Yeah, let's do it. Let's do it. Let me pull up VS Code here. One of the things that, I mean, unfortunately, I won't say unfortunately, obviously a banking crisis is a banking crisis. It needs to have some time spent on it. But I pulled up, what did I pull up? Oh, I know what I did. I found, if you go to any, like finance website, I personally use my FX chart just because it's nicely laid out. I like it in terms of how it looks online. I'm pulling it up so everyone can see. We've talked about this before, but just so everyone at home is tracking here. They at any given like economic data that drops, CPI or whatever, there's they will get kind of market participants to give their forecast or consensus of what they anticipate CPI to be, unemployment, non-farm payrolls, right? Whatever it is, there's always a consensus. So I was able to get the consensus data for both CPI and non-farm payrolls going back to 2007. And I think something that's, obviously everyone's aware of it, but something that is kind of flying under the radar right now is we hit, I think, 11 months in a row where non-farm payrolls were higher than expected, right? Which is, I think, the longest stretch ever, at least that I can tell. So that got me thinking, I need to finally do it. So I found a data stream to get the forecast going back to 2007. And I thought, let's overlay the Fed funds rate and like the 10-year yield with the forecast of non-farm payrolls, the difference between the forecast of non-farm payrolls and the actual non-farm payrolls. So I'll bring back up VS Code, show you kind of how I set this up. So this is the Fed funds version of it. And I'm going up way too high here. Here's my table. The difference of the moving average. Here's the Fed funds rate. Here's the actual difference between the actual non-farm payrolls and the forecast. And so we have our setup here. And then I did a moving average just to, it helps kind of smooth it out. And then I overlaid I overlaid the two. And I think that the biggest thing here, and this chart doesn't do this justice simply because of the overshoot of the COVID era, right? But there is and this is again on a 1 year rolling average here, the difference between expected and actual of non-farm payrolls is higher than it's ever been, COVID notwithstanding, right? And obviously from an MMT perspective, we'd have a pretty good explanation of this. So what I did is, because Fed funds rate is pretty, it's not dynamic in any way, right? It's not floating the Fed. It technically is, but it's pretty well set by the Fed. I decided to do the 10-year yield to see if there's any correlation between kind of the shorter term movements between the two. And so I overlaid them, but again, you get this massive spike that occurs during COVID. So I just decided to gut that spike out. I took out the dates from March until March 2020 until July of 2021. and went ahead and plotted that. So here's the plot going back to 2007 to today, or I guess 2008, because I did, or actually almost 2009, because I did the year rolling average. And I mean, the one thing you can see is just the dramatic spike in terms of what the expectation was to where we're at now, and that it's higher than it's ever been. I mean, normally it's not off, and certainly the moving average of it is rarely off of zero, right? I mean, we're looking at the blue line here. It coils very closely to the zero line, and it doesn't look like there's even much of a correlation in the short run. Maybe a little bit. Maybe it is causal. I could maybe run Granger cause on it and the other test to see if it's there. It would make sense that actually things probably get a little off because of government spending being not fully anticipated. But there's no doubt that the correlation kicks in, hyperdrive, if you will, as of late. And I think the explanatory factor is the fact that rates are so high right now. It is because there's that income pushing employment higher, unemployment lower. I mean, everything we've talked about, I'm not gonna. Well, I can go over it again if we need to, but it's everything that we've been saying for quite a few weeks now. And I thought this was kind of interesting, so I'll probably run a few more tests on it, post it to Twitter. Something needs to explain. And again, it's not that employment is just in good shape. It's that it's so much better than expected, right? I mean, I think
the difference between your actual and the forecast. So actual is going up, right?
Yeah, to levels that we've never seen before, except for, I mean, if you're not an MMT, you're probably going to look at this and say, oh, but you can't understand the COVID era. Well, I mean, I think there are better explanations. I think guessing what was going on during the COVID era was going to be hard no matter what. So that's my thought. That's kind of the research. I also have the CPI data. I just ran out of time before I could get this thing live before the live stream for the CPI data. But I'll do the same thing for the CPI data. Again, we're just the expectations continue to be off, and also off to a magnitude that we've never really seen before. As far as I can see the data, I'd love to see what happened during the Great Financial Crisis and .com bubble, but I think I'm onto something. I mean, again, this is just the sort of stuff too that MMT allows you to do, right? You have a framework, you have kind of hypothesis, and then you see it in the data, and it feels like this happens at every turn with kind of an MMT framework. So that's what I pieced together this week, and kind of been thinking about. I don't know if you had any thoughts at all, but if any comments came up that are worth responding to while I was sharing that.
Well, I don't know. Ghost on the Half Shell with it's the quality of the employment, or if you like, unemployment. So I don't know. I know in Australia, right? I keep saying Australia is closer to it. Closer to me, I sort of worry about them as well, because they do affect us a bit with trade relations. But so they are experiencing they are experiencing the downside of the rate hikes over there. Their central bank, the RBA, is hiking rates, and it is having a bad effect because their economy is a little bit slightly differently structured to the USA.
Yes. Yep.
And so for whatever reason, like the trickle down isn't working the same way there. And so I think their unemployment figures are a bit crazy now. But for the USA, I don't know. I think the ratios between the different unemployment measures are still pretty much the same. So but I mean, if I look at U6, the total unemployed, that's also marginal employment. So, and part-timers did really spike after COVID. So it went a little bit beyond the normal ratio, and but now is about the same. And I think the one it's interesting because the one employment figure that also took a while to adjust was the job losses, but they're, I think, now back to fairly normal levels relative to I guess what you call the base or the lowest unemployment figure, the U1, people unemployed for 15 weeks or longer. So I still don't really see unemployment kicking up yet in the USA. So
it's been holding strong.
It's still just sort of coming down even. Yeah.
We had the chance,
slower than before.
The Fed chickened out, you know?
Yeah. I mean, you're not going to get unemployment drop to below what they call the Nehru levels just because, government spending is nowhere near sufficient.
Yeah.
And that's the MMT story. If unemployment is the evidence, the government isn't spending enough to satisfy need to pay taxes and desires to save. And certainly with inflation, there's huge desires to also spend and save kind of at the same time. It's like two directions. The ultra wealthy can save and use bonds to avoid a lot of the inflation, but everyone else who can't afford to buy bonds and other investments, they have to spend because that's what they really are driven to have to do.
Ooh, speaking of buying bonds, I saw a really good quote for you investors. A really good quote from Warren Buffett today, just about how he loves looking for stocks while interest rates are high. While everyone else is seeing the glimmer of the massively high interest rate. He knows that's usually the time and place to go look at stocks that have been beaten up. And I think he's right. I think he's right. We'll find out. But
all right.
Hamel just said that unemployment in Australia is at 3.5%.
Oh, that's okay.
Yeah,
that doesn't seem too bad. So maybe they still haven't really felt the bite. They will say occasionally jump when it's like a 0.2% change.
Yeah.
But,
yeah.
I don't know. Yeah. So maybe you're right. Maybe even in Australia, it's not getting too
bad.
Although again, I want to look at the rate of change of that as well, because it may be starting to just upturn a little bit. I don't know. Yeah, we'll see.
This is the comment right here that I think it would be a good time to play "Party in the USA" by Miley Cyrus. Yes, I will hop on that plane to LAX with just a dream and my cardigan.
Classic.
You got me.
I had that a lot every day. I was listening to that.
Yeah.
Back when my daughter was younger.
Yeah.
Still a Miley Cyrus fan, man.
You are.
But she's now moved into Ed Sheeran and what's that guy from One Direction?
Zayn?
Harry Styles. Harry Styles. Came to New Zealand recently. So my daughter just started as a primary school teacher.
Okay. And
like that fourth or fifth week into the job, can I take some time off to go to this rock concert? No worries. Yeah, she did. Took some time off to go to see Harry Styles and Lord, the New Zealand singer.
Yeah. I like.
He's pretty cool.
Yeah, her Royal song was cool. God, I'm so glad we have such a diverse group here. Actually, we're not diverse. I mean, we're all a bunch of lovers of Miley Cyrus, as it turns out. I'll give it to her, man. That Wrecking Ball song is pretty good that she had. Heck, even her new one's pretty good. I'm a sucker for packaged pop music. You take me out of my comfort zone. I'm not going to listen to it, but all right, we'll get off the music discussion, and we'll go on to banking proposals. You want to do some banking proposals?
Yeah.
Man, if I could get away with it.
Do we have anyone else rather than males in our chat though? How do you get really diverse in terms of a live stream devoted to macroeconomics and macro finance?
Give me just a second. I'm gonna pull up. You guys aren't gonna be able to see this, but I'm gonna pull up. I'm gonna pull up YouTube Studio, and I'm gonna give you some unfortunate statistics about our audience breakdown.
Well, you can lie with statistics.
No, I mean it is what it is.
It is what it is.
Lifetime audience. Let's see. God, what the hell's up with all these pop-ups? God, this is so sad. If you had to guess what the gender breakdown is of my channel, percentage, right, male and female, what do you think it would be?
I don't want to say.
Okay, yeah. The lifetime. This has gotten worse over time too. I think it used to be slightly higher than this. Lifetime, 98.8% male, 1.2% female.
Okay, better than I thought. So in relative terms, we're pretty gender diverse. I mean, go ahead.
Yeah.
You look at the other MMT podcasts, right? Patricia and Christian. Okay, they got a female host, so that's good. I mean, I reckon though, MMT, we could easily invite a lot of women and have their perspective as well, other than just the finance bros.
Yeah,
because that's what MMT does. It attracts, and so you have to look at. I think Steve and Ty also have pretty mostly males.
But
Steve keeps me on Steve and Friends. Oh yeah, sure. But is it working? Maybe there's a bit of a lag. So you definitely have to be more clean shaven and blah blah blah. But you look at real progressive and Steve Grumbine. He's got a lot of a much better gender diverse audience, and I think that speaks to his project, even though they're small numbers.
They
don't get a lot of female commentary and comments. I mean, a lot of economics is just dominated by testosterone and all that. That's just the nature of it seems. Plus, the whole economics profession is just a seriously terrible kind of profession to be in if you're female, unfortunately. Even physics is a bit like that too, but it's not anywhere near as bad because just there's a whole lot of politics involved in economics. But yeah, if you look at real progressives, I think they're a good case to say that MMT just does appeal to much a broader spectrum of human beings, and that's a good thing.
It is kind of interesting.
Status quo, yeah.
This is purely anecdotal. But I get a much more diverse group of people engaging with my stuff on Twitter than I do on YouTube. I can only actually think of one female that's ever engaged consistently, and it was years ago with what I do here on YouTube. But I get what feels to be a far broader spectrum coming from Twitter. Yeah. I don't know.
Twitter is maybe a little bit more fun,
Yeah.
I mean, we'd have to open it up to more of a lounge conversation, perhaps, to get a lot more interest. But also, we're a very small sample size.
Yes.
So I wouldn't want to crush us too much with any wokeness. But I still would like to see some more diversity in the whole audience. It'd be just a good thing to see. I have no idea how to generate it.
I agree.
I think people coming over, migrating from real progressives would be one way, or like the chat status quo. Probably there's a few others. Where you get people who are really interested in the social justice side, I think you're likely to get
that's
much better representation from your population and your culture.
That's right.
And unfortunately, you know, with macro trading, it's not exactly a lot of social justice, even though we talk about that on the live stream. It's just not a thing that's going to attract eyeballs from that space. Maybe over time, and maybe we should sort of get Naomi Prinz or Stephanie Kelton maybe, or someone on.
Yeah.
In the future.
I wouldn't mind platforming someone like Stephanie Kelton.
Have Lena, I reckon.
I think Stephanie Kelton is going places, and I think we could help her get there on our live stream.
Yeah. We should start a little political project.
All righty. We're having fun. Do we want to talk banking proposals?
Talk banking proposals. Just with Ty, if you are married, you have a spouse, or if you've got a girlfriend, and you do sort of get them to tune in, let us know and get them to contribute too, because it's like sometimes, I mean, even I myself in the early days of MMT, I was reluctant to express my opinion and all that, and it just took a bit of time to realize that a lot of people in economics just don't know what they're talking about. And I still don't know really fully what I'm talking about, but I figured like to be part of the discourse, and to maybe have somewhat of a valid perspective, it's not going to hurt. Even if I have some really dumb takes on Twitter, I think overall just generating debate and discourse is probably a healthy thing. So definitely, if you can get someone to listen into our live stream, that'd be great. But the more value is from them contributing, from you guys contributing and asking interesting questions and so forth. Speaking of which, the proposals.
Yeah, we can move on to proposals. Although I'm oh man, look at that. Hi.
Oh, hi, Marie. Nice to meet you, Internet.
Ty's wife. Welcome aboard. Glad you're here. Thanks for joining. All right.
That's awesome.
Glad we got the whole crew watching. Make sure you hit the like button. Subscribe as well. Let's see. Please blink if he's forcing you to sit there. We can save you. That's funny.
Oh no.
I mean, you're gonna want to stick around for what we're about to talk about. We're about to talk about 2010, the seminal work put out by Warren Mosler on banking. And if there's not a face that will keep you around more than Timothy Geithner's face from 2010,
oh my gosh,
I don't know what's gonna keep you around. Mike A, I don't know where you're at, man, but welcome to the MMT Macro Trader live stream. You've stumbled in at the right time, my man. Proposals for the banking system that he put out. Bling bling. This is hilarious, man.
Is it possible to invert your screen colors there on your browser?
I don't know.
Yeah, man, Chrome. It's the invert extension. Anyway,
we'll get it set up for next time.
Yeah. So, like I said, this is seminal. This is seminal stuff. It's like if you were in academia, this would be the proposal that everyone would be, launching their policy and thinking off. Unfortunately, it's I don't know. It's seminal, but it's like probably not well read enough, and certainly not taken to heart or heeded. But I think over time, if you look through Warren's proposals, you can kind of see maybe where there's a pathway to getting some of these things done. But the initial bit is just just so choice. It's like, under a gold standard or a fixed exchange rate regime. So the key there is or other fixed exchange rate regimes. So, everyone sort of tends to realize we're not on a gold standard anymore, even if they want it to be, even if you're a libertarian.
Yep.
But they don't all realize what the heck a fixed exchange rate regime is all about. If you're on a fixed exchange rate, if you're going to keep your exchange rate fixed, it's like an artificial constraint.
Yep.
And so you cannot 100% insure bank deposits. You can't protect the banks in that way. And you are constantly under the threat of having to raise rates in order to withdraw cash, go into bonds, all that sort of thing, in order to stop in order to stop your exchange rate moving, right? Which is it's like crazy. It's like why do you care how the exchange rate moves? So if you've got a fiat currency, that is.
Some guy in Chicago 50 years ago said it was really important. That's why.
Yeah. Some supposed experts.
Yeah. All right. So proposals for the banking system. Number one is, okay. Banks should be allowed directly to borrowers and service those loans. I'm sorry, and keep those, and then service and keep those loans on their own balance sheet. There's no further public purpose served by selling loans or other financial assets to third parties, but there are substantial real costs to government regarding the regulation and supervision of these activities. Oh, that's interesting. Okay, I went through this quick. That's a really good point. Yeah, that we have to waste a
lot of resources. Yeah,
doing regulation.
So one of the memes or sound bites for that is you tell banks only what they're allowed to do.
Yeah.
So in other words, you don't have to waste time telling them what they can't do, because they'll always find scams and things and fraud or just creative financing ventures to get around what you tell them they can't do. So instead, you just say you're only allowed to do this.
Yeah.
So you can lend to your borrowers, and you have to keep those loans on your own books. You're not allowed to package them and sell them off.
Yep. Yep.
But on the other hand, your deposits, I think that maybe it comes down later. One of the other proposals is just to go to 100% deposit insurance, so that the depositors, who shouldn't be the ones assessing the risk of depositing into their bank. It's not the depositor's job to shop around to see which bank is the safest bank. It's all banks should just be safe for the depositor.
Yep.
And the LIBOR is an interesting one. So is it true? This is a question to you or the chat. Is it true that you've gone off the LIBOR now?
Well, they have this thing called SOFR now. Yeah.
What's that?
The replacement for LIBOR.
Is it still some other country setting your interest?
No, God, it's been a while since I've looked into SOFR versus LIBOR, and I don't know if I can explain it off the top of my head in a way that makes complete sense. I mean, there is still a LIBOR rate. God. You know who's really good on that, and I'm sure quite a few people who are watching, Jeff Snyder, kind of explaining the whole situation, but I guess I could...
Proposal number 2 is don't let a foreign country determine your interest rates.
Sounds sensible to me. So the secured overnight financing rate is the broad measure of cost of borrowing cash overnight collateralized by treasury securities. I think the Fed kind of understood the risk that LIBOR, because they couldn't control the LIBOR rate. I mean, that's really what it boiled down to, right? And they want to try and control it. So, it'd be kind of an interesting thought if we get Warren on again to discuss LIBOR versus SOFR or with the broader discussion of then is the Fed ever going to be able to actually achieve what they think they are by switching over to SOFR? Banks shouldn't be allowed to have subsidiaries of any kind. No public purpose is served by allowing banks to hold any assets off balance sheet. Ken, welcome aboard. Sofer is where I'm sat watching this. Nice. I appreciate it.
Yeah. Proposal 3 gets to the idea that, you know, banks are a public-private partnership.
Yep.
No matter what, whatever anyone thinks that they are just private, they're not. They serve a public interest, just like your internet service provider, really. So, the proposal that Warren has what I would call sort of a type of a version of narrow banking. Just make it simple, but not too simple, so they can price risk, they can loan to the customers, and they can run a payment system. Or actually, come to think of it, the recent article from Nathan Tankus I read, he and Rowan Gray were proposing that maybe banks shouldn't even do both. That maybe running the payments layer could just be a central bank thing. And central bank digital currency, and that public-private banks, chartered licensed banks, could just do the credit analysis business and do not much else. You know, it takes all the adrenaline perhaps out of banking. But I think you know, you want bankers to be a bit boring, and maybe so they don't have to spend so much time in the bank, and have more time with their family, and you know, go out, play golf or tennis or whatever. I think that would improve the banking system. Get all the speculation and you know, trading activity. Get that out of the hands of the banks, and give bankers a little bit more of a boring life, but also a shorter work week, like, you know, an hour a day or whatever.
An hour a day. I like it.
Check the software's running. Talk to a few customers.
It does seem like a terrible design to have the payment layer right next to the super risky, this could blow up the economy layer. I mean, I was making the joke the other day with my friends that you know, I can't make that payment on my my water bill this month because my bank decided it would be a good idea to invest in ape JPEGs. So you know, could you guys loan me $50 so I can get some water bottles until I get this water turned back on? I mean, that that does always seem a bit wild to me, that that the payment layer.
Although aren't most banks like operating separately, like the people running the payments layers?
They are
a little bit different to the people that are on the loan or credit desks and so on.
But I think the larger point is, the last thing you want is for payment clearing to get in any way held up at all, right?
Held up,
I mean, even for a couple days, you don't want that to, you don't want that plumbing to get mixed up with a banking crisis. That I mean, I think banking crises are going to happen, right? I mean, I think that's part of a, we don't have to have it derail the global economy, but that as Steve Keen eloquently puts it, it's going to be a cyclical system because it has life in it, and and there are going to be winners and losers. But the last thing we want is when those losers go out, that if has any risk of disrupting the broader system.
Right.
Yes.
Well, and at the end of the day, it's scorekeeping. So central bank can do what they like to keep public confidence in the banks, which is what they should do. But yeah, I mean, just get rid of all the crazy speculative stuff. It just seems sensible. If the private sector, and fully private sector, so not insured by the public sector, not government insured, if they want to get into crazy speculation and gambling, well then that should be covered by a different set of laws, buyer beware type laws, not the banking system, right? Otherwise, it goes back to the first point is that you're just
creating a whole lot of needless activity for regulators who are going to be super stressed and overworked.
Yeah. Regulators. Speaking of mid-90s rap. All right. Let's see. Where are we at? Banks should not be allowed to accept financial assets as collateral for loans. No public purpose. Did we get to number 4 yet? U.S. banks should not be allowed to lend offshore. No public purpose is served by allowing U.S. banks to lend for foreign purposes. Yeah, it makes sense. Yeah, not only that, I mean, it also then just kind of helps the foreigners, the other countries better align themselves with their needs.
Yeah.
Yeah, nice tie. I agree. The government should bail me out of any bad. You know when they don't bail you out is when you do make money and they want their take of it. They want their cut of it in the year. Banks should not be allowed to buy or sell credit default insurance. The public purpose of banking as a public-private partnership is to allow the private sector to price risk rather than the public sector pricing risk through publicly owned banks. If a bank instead relies on credit default insurance, it is transferring that pricing of risk to a third party, which is counter to the public purpose of the current public-private. Oh yeah, banking system. Yeah, that's a good one. That's interesting. Yeah. No,
they're all pretty good. I mean, I don't know about number 4 though, whether people actually realize the implications of that. Like,
did
using
we not hang on that
financial assets as collateral might not. You can imagine. I mean, I can imagine some people thinking, "Well, why not? What's the difference?" But I think that's quite a huge one because it removes a lot of fragility. Purely financial assets, not being real assets. Are subject to all sorts of crazy speculative runs and all that. Whereas, if you're using a house or real estate as an asset, not much can go wrong with that, right?
Famous last.
I mean,
famous
not the mortgage,
words.
not the mortgage. Not freaking heck. The mortgage is the financial asset.
Oh,
the real estate is not.
Oh, yeah.
You know what I mean?
Yeah. The house itself.
Yeah.
The house itself.
You gotta.
Yeah, I get what you're saying. Yeah. Okay.
Yeah, you don't use the mortgage. Anyway.
Yeah. I get it. Where do we end up? Banks should not be allowed to engage in proprietary trading or any profit-making ventures beyond basic lending. If the public sector wants to venture out of banking for some presumed public purpose, it can.
That's what
yeah.
What I mentioned before.
Yeah.
Make banking boring.
Yep. Use FDIC-approved credit models for evaluation of bank assets. I would not allow mark-to-market of bank assets. In fact, if there's a valid argument to making a particular bank asset to market price, that likely means that asset should not be permissible bank asset in the first place.
Yeah. That's very quotable.
Yeah. Yeah.
Very good point.
The public purpose of banking is to facilitate loans based on credit analysis rather than market valuation. Yeah.
Yeah.
Which, I mean, just thinking through this, right?
Thinking through it, yeah.
One of the things too is, these credit worthiness models.
Yeah.
Maybe this is something that Rohan Gray and Nathan Tankus get into. There's a danger in these things because these models, especially the more and more they get into, the AI side of things beyond something it's a little bit more understood math. Social biases can get put into those, right?
Right.
And I think what's kind of cool about going the route of serving public purpose is you can use that as a gauge to have that as a dial where the government can step in and say, yep, we're going to guarantee some of these loans because it we have a broader social,
Right.
social target that we're getting at, right?
Right.
And you can bake that into the credit analysis.
Right.
I mean, maybe I'm overstepping what Warren wants here, but yeah.
Maybe, I don't know. Yeah, that's a good point.
I mean, it allows it to get back to more the public, function of banking as opposed to just
right. Yeah. What sort of ventures do you really want to fund?
Yeah, exactly.
And if something's worth funding and they've made a mess of their finances, do you want to back them with unsecured loans or even zero interest loans or whatever, just to get a good thing going? I don't want to be a shill for high energy physics, but it's always been sad to me that the superconducting super collider was pulled just because it was basically Congress funding, and they just decided the physicists were the administrators on the superconducting super collider were wasting the money on parties and whatever, instead of getting on with the engineering building the thing. But that was easily corrected by just telling them to build the thing.
Yeah.
And so anyway, I agree with you, but I think Warren's just trying to keep things a bit conservative here.
Yep.
Which is okay.
Yeah, the FDIC stuff makes a lot of sense. Remove the cap on deposit insurance. Don't tax the banks to recover funds lost of a bank failure.
I'm not sure how the FDIC is funded. Probably by Treasury, right? And they just have an account at the Fed or their own account.
That's what Ty is asking, is where's the account? I believe it gets
account.
Yeah, I believe it gets funded by the fees that the banks pay into it.
That could probably be dropped. Just be funded directly by the Treasury.
I mean, it kind of is, right? So I mean, in the moment of the crisis, it kind of is, because they started that $25 billion vehicle to cover the losses of the bank.
Mm-hmm.
The FDIC is to do its job without any assistance by the Treasury apart from funding any FDIC expenditure. FDIC is charged with taking over banks it deems insolvent and selling those assets. The TARP program was at least partially established to allow the U.S. Treasury to buy equity in banks to keep them from being declared insolvent. What TARP did, however, was reveal the total failure of both the Bush and Obama administrations to comprehend the essence of the workings of the banking system. Okay, that's pretty good.
That's interesting. So what is he saying there? I mean,
the FDIC. I mean, it's been so long since TARP was a thing and all that. The FDIC is charged with taking over any banks.
Yeah. I mean, for me, it's not really a question to me of what the funding for the FDIC is. I think that they should just be doing a job, so they've got unlimited facilities to ensure deposits. Shouldn't even really be a funding question. But if you tie it to, I guess so the point, I guess, is that if you tie it to Treasury, then you're allowing politicians or the unawares in the crowd to say, "Oh, it's taxpayers bailing it out."
Oh, okay, yeah.
I think so.
Well, when did
you maybe want to avoid that?
Okay,
with something called a fund.
The Troubled Asset Relief Program. Okay, yeah. Oh, yeah. I think you're right.
It was able to be used by opponents to say, "Oh, it's the taxpayer bailing them out."
Yes,
I think that's when.
Yes. Okay.
That might be what he writes about in the next paragraph or two. I'm not sure. Yeah. So if you go down to the next page,
okay.
It makes no. Yeah. So the point is, it makes no difference whether it's the government through the quote unquote taxpayer in the Treasury, or whether it's a direct capital injection into the bank. So better to make it look as though it's not the taxpayer.
Yes.
Even though it never is the taxpayer.
Yeah.
Yeah.
Let's see. Proposals for the Federal Reserve. The Fed should lend unsecured to member banks and in limited quantities at the target rate by simply trading in the Fed funds market. There's no reason to do otherwise. Currently, the Fed will only loan to its banks on a fully collateralized basis. However, this is both redundant and disruptive. The Fed demanding collateral when it lends is redundant because all bank assets are already fully regulated by Fed regulators. It's the job of the regulators to make sure that all FDI insured deposits are safe and that taxpayer money is not at risk from losses that exceed the available private capital. Yep. Therefore, the FDIC has already determined that the funds. Okay, good. You're saying the funds loaned by the Fed to the bank can only be invested in legal assets, and that the bank is adequately capitalized as required by law. Yeah.
So he's probably saying there's already, maybe not perfect, but sufficient legal requirements on what assets banks can hold. Maybe they could be tightened, but that becomes a bit of a policy variable, right? It should be maybe up to some discretion for the Fed to have some leeway or buffer in tightening or loosening those legal requirements for the assets the banks can hold. And that, like I said, that's one way of doing a better than monetary policy to tighten lending is to work on the collateral requirements.
Yeah.
Rather than the freaking interest rate. So that all makes sense to me. I don't know.
Yeah, Ty.
Anyone got any questions about these proposals?
Yeah, Ty said a few questions. Ty, the FDIC covers the deposits
up to 250K.
Up to 250, and then the SPIC covers deposits in your investment accounts in the U.S. Up to 500,000. Yeah.
Right. Plus, there's some facilities that Nathan Tankus, again, I learned this from him. There are some facilities, especially like Silicon Valley investors could have used. If you've got more than 250K, if you've got a few million, there are these facilities where you can automatically get it. It's basically it's just a software system where you can automatically get your 250K spread amongst various different banks. All fully insured, just as long as there are enough banks that the system can distribute your deposit to, and that way, it just shows you the whole phoniness of the system. It's like if you can do that, because you've got enough, because you're so wealthy that you can afford the fee to use that software. Why not just make it fully insured for any old Joe Blow?
Yeah.
Not that we've all got more than 250K.
Yeah.
But at least a small retail depositors are fully insured essentially. And it's just that what do you want to do with the really wealthy firms who have a lot of money that they want to deposit, and it's not creating any fragility or moral hazards to just insure those deposits, because it's money people gained by whatever means, and it's it's no reason for them to lose it just because their bank made some crazy decisions.
Yeah. I'm reading some of those. Yeah.
Question about something sounding a bit crazy. I'm not sure what that refers to.
Yeah.
Keeping chickens in a fox den. Well, I definitely agree. You shouldn't keep chickens in fox dens, but I'm not sure what that's referring to. The FDIC holds funds in the commercial banks, not the Fed. Oh, yeah. I mean, it doesn't matter where the FDIC holds their funds. I mean, because ultimately they can always find legal means to issue the payments or to back the deposits. The question is, I guess, about the psychology. I think it would be bad psychology for them to be doing anything with commercial banks because there's no need to.
So those are the banking proposals. Do you want to go over the treasuries as well? Oh, there's two of them.
Treasuries. It's only a couple of quick
I would
ones.
cease all issuance of treasury securities. Instead, any deficit spending would accumulate as excess reserve balances at the Fed. No public purpose is served by the issuance of treasury securities with non-convertible currency and a floating exchange rate policy. Issuing treasury securities only serves to support the term structure of interest rates at a higher level than would be the case, which we're finding out week after week, month after month, that is absolutely the case.
I think every MMT who's interested in this stuff should like study Warren's proposals and also, and then go through like the mental exercise of imagining you're talking to a central bank or a treasury official, and then imagine what would happen if you had this conversation with them. And
then you want them to go through the mental exercise of that. That might be deemed cruel and unusual punishment.
Yeah, just do it in the privacy of your own home.
Yeah,
but then when you get really good on this and sort of have it down pat, actually go and try and find someone who works in treasury and have a discussion with them, see how it goes. At that point, you got to stop thinking of it as cruel and unusual punishment. It's more as an exercise in comedy.
Yeah,
relief. But
because you can imagine going to people with these proposals and they'd be just that their mentality would be the money is the gold. You're crazy. All these policies are crazy.
Yep.
So that's I definitely recommend. Yeah. Every now and again, you should pull out this and read it and go through it and just check against reality. It's good stuff.
Yeah, he will say, because of the cottage industry that exists and kind of what Ty is saying, that it's so massive that he would allow. I mean, that you could get rid of everything up to a couple months, maybe a year or two, and still issue the shorter duration stuff. Yeah,
shorter duration. Yeah. You don't make things change too dramatically, but enough small changes in line with these proposals of Moses would get rid of a whole lot of financial fragility, would restore a lot of public trust in banks, and indirectly, therefore, the central bank, the treasury, and your government. And so it's like, to me, it's like no-brainer stuff. But yeah, there are some issues about how you even get a bit closer to implementing some of these proposals, and maybe it has to come from a small country somewhere.
God, could you imagine if they came out tomorrow and we're like, yeah, okay, we're going to go ahead and get rid of the 30-year, 10-year, 5-year. Oh my God.
Give us our money.
I mean, really all they got to do, right, is replace the interest income that they're handing off to bond owners with just higher Social Security payments.
Yeah, exactly.
Right.
Yeah.
I mean,
that'd probably do it.
Why
do people save for retirement?
Yeah, exactly. Yeah, give the 1 trillion you're handing over every month or whatever it is right now. It's not quite that much, but yeah, I mean, give the hundreds of billions you're handing off every single month to retirees starting at 55, and let them go have fun in life. They've put in their hours. Let them go. I really think Social Security. Yeah, I mean, I have thoughts. I really think Social Security should start at like 18. You convinced me that like a universal basic income is not the way to go, but I mean, I do think there should be like a minimum living income or something like that. I mean, I don't even know how to call. I mean, what to call it, but I think
you don't want people retiring that early. There's too much.
Yeah,
too much interesting things to do.
Yeah.
Too many interesting things to do. I don't mind you guys e-gaming all day, but just you don't have to gloat about it.
No, I guess
if you've done the work, if you've worked on a building construction site, and then you can go home and do a bit of e-gaming, that's fine. But
no, I guess my thought would be, let me here's kind of my proposal, right?
Yeah.
That you have at 18 you get $100 a month in Social Security, right? I mean, it's not much, right? But just enough to make sure that if you're in a spot in life, because like if you're in a spot in life where you just need some income so you can continue to go to school or something like that, right? I mean, it's an easy way to get some very basic income to overcome other structural deficiencies.
Yeah. That's going against the Giesel currency kind of model, though, because it's the opposite way. So you're saying you want some inflation, and I think I think using a guaranteed basic income, not a UBI, but a basic income for people who aren't currently employed, is something you can do alongside a job guarantee. But it undermines a job guarantee if it's too high a payment. So maybe $100 a week or something, but also you have to have the job guarantee available as an option. And then what the $100 does, it allows people to slack off a little bit. I mean, they're not going to be living like kings on $100 a week, but it gives them maybe 1 or 2 weeks, maybe a month, where they can think about things and figure out whether they want to go study or whether they want to go on a job guarantee.
Yeah.
And it gives you that flexibility, and it re-gauges the currency if too many people are using it. It re-gauges the currency downwards. So it's some designed inflation, but it's a little bit loose because you don't know how many people are going to opt for that, for a week or a month or whatever.
Yeah. So
maybe that's right. Wouldn't be in my country where I was the leader. But,
I like Josh is bringing this up, right? I mean, really, it would be a backdoor way to be able to pay people to do things like go to.
I like that proposal better.
To go to school.
I think you pay people to go to school and make the reward of going to school the learning rather than the grade.
Yeah.
And because once you actually pay to go to university, you're paying to get a grade or a certificate, and that becomes the goal. So instead, reverse that around. You say, "No, we'll pay you to go to university." That could always be a government policy. Much better than a free basic income guarantee.
Which I agree. I mean, I would agree. Yeah, that you have something to show for it. Yeah.
So in the USA, you've got to teach people how to, serve drinks to the Argentinians. as they start to got to do service with a smile.
Well, with global warming, my neck of the woods, and then not too far after me, someone like Ty up in Canada, right? We are going to be the tropical destination in not too long.
Oh yeah.
So you will be coming to Lake Michigan for vacation with the palm trees on Traverse Bay.
Well, just get a move on migrating those trees. Build up some seeds and All
right, man. I think tonight we fixed banking and
don't forget there's also the fix for the small banks, which is to again, allow unlimited amounts of loans to the small banks, and so they're not just frantically chasing deposit holders and at risk of going under. Is one of the other things. Very, very easy fix if the government wanted to do it. And again, I think I think a small nation is going to be able to do this. A nation where you're a little bit more flexible, and you don't have to move so much of a huge mountain of inertia. But so their proposals for any country, I think they work for pretty much any country. And they're like I said, seminal. Definitely go to reads anytime you sort of want to anytime you have imagination about going to visit your local central banker or treasury officials,
yeah,
just bone up with this stuff and give
it a go.
Give it a go.
Next time next time I get invited to Timothy Geithner's dinner
treat in the Hamptons. Yeah.
what a picture. God, what a picture. Somehow should project this live stream on the side of the Fed building. Yeah. If you go back in the annals of my YouTube channel, actually, I was out, just happened to be out in Washington D.C., and so I recorded a video in front of what's the name of the Fed building? The Eccles building, I think is what it's called, something like that. Mm-hmm. So yeah, I've got a video where I'm in front of the Fed building telling them what's up.
Mm-hmm. Maybe we've got our geography wrong. United States won't become tropical; it'll become Saharan. That will require a little bit of a different structure to the economy.
The South will become like the Sahara, right? Yeah, but the North will.
The Rockies and the Appalachians will still drop rain on you.
Yeah, I mean, where I live, Michigan, right? I mean, we are surrounded by like something like what 70%, 80% of the globe's fresh water. That's what it is. We're gonna be a paradise. We're gonna be a paradise. It's gonna be great. As the 8 billion, the world's 8 billion population decides to descend. The Great Lakes. Let's see. It's Hero, yeah. I think we've kind of hit on the things I wanted to hit on tonight. Going back, I mean, real quick, I'll just pull up my chart of the S&P 500. As it stands right now, as it stands right now, I'm not. There could be more risk. There could be more risk in the market than kind of first meets the eye. I didn't see anyone on Twitter, saying, hey, these small regional banks have duration risk and they're about to blow up. So, I mean, that, not too many people saw this coming ahead of time to be able to profit off of it. Bob Knight asked about it. I'm still long. 3,800 seems to be a key level. I haven't seen, one of the things I look at is the distribution of the hedging that takes place by market makers and what that looks like relative to price. I haven't seen a crazy shift that you would see relative to major meltdown. I mean, we're certainly in a potential high volatility area. There's no doubt about that. But my instincts tell me that we recover here. Josh, your question regarding, I'm going to go to chat. Your question regarding tax season, could that create a crunch? Yeah, I mean, it absolutely could. Certainly, if there's a drain on the fiscal pool, if you will, that will happen during tax season, and that occurs and coincides with stress on the markets as well. Yeah, that could definitely create a scenario where things get a little dicey. But I do feel like we're a bit underpriced here. And so I could easily see a snapback upwards. Again, I think the risk is if the Fed takes their foot off the gas, I think you can make a case that actually decreasing rates right now could be enough to actually prick the bubble, so to speak. So those are just a couple of my thoughts and kind of the things that, that I'm kind of ruminating on as we head into kind of the next phase of this market kind of recovery-ish.
Depend on what the tax return comes from, right? It could be increased sales, increased tax return.
Yeah.
And then it's kind of a little bit market neutral more in that way. I don't know.
Let's
about the history here. Did Napoleon come in and try to take over Washington D.C.?
We almost took Michigan in the War of 1812 when the Canadians. I didn't know this. What? This is news to me, man. The Canadians had.
Did brush up on some history.
Had Michigan in 1812. We didn't get taught this, and
no.
Michigan is undefeated in its wars, which we had against Ohio, for Toledo. No, I think Ohio ended up getting Toledo, and we got the Upper Peninsula. Canada, Michigan, War of 1812, Siege of Detroit. This is okay. This is cool. I'm gonna learn something tonight. You probably just made my kids some schoolwork, to be quite honest. I think I'm gonna send my kids down this rabbit trail and ship me back
be careful.
I wonder if ChatGPT is caught up on this. Yeah, because they're gonna have to ship me back a report, a 5-paragraph essay.
Oh, yeah. I think the bank term funding program, Hamel, is I think Nathan Tankers and the Modern Money Network guys are claiming that this is basically a what do you call it? Basically vindication of their whole research program. If you look at the banking proposals that Warren has written about, then certainly the Fed can, fully fund banks, and I think they were calling it emergency measures or whatever. But whether they use the legal escape route of it being an emergency measure, or whether they just decide that it's going to be just permanent policy, I guess either way, it seems to vindicate the Modern Money Network guys' research program. So no public purpose served in just letting banks that are essentially doing just what they're supposed to do. Maybe a little bit of bad credit assessment, but no public purpose served in letting them go under. I always think though, if you can fire the boards of the banks, you don't have to shut the whole thing down.
Yeah.
It's like there's no purpose in it. It's an institution. It may have bad management. You can fire the management. You don't have to have deposit holders put at risk because of bad decisions their bank managers do. I've read this in Reserve Bank of New Zealand and Treasury proposals. Not that I read them every day, but in the past I've read these statements from these officials, and they will talk about the whole idea of the market discipline, and that the bank customers are there to ensure that the banks are doing an okay job, and are not acting too wildly or whatever. And that's just completely divorced from reality. But most people don't. Even a rich person doesn't go down and assess whether their bank is risky or risk free enough to drop a deposit in. It's just it's just completely ridiculous. So definitely, I don't think.
I'd be really interested. Actually, the Odd Lots podcast had a guy on that's kind of like an expert, and and I'm in the exact same boat. I still bank with the same institution that I started with on day one at my first job, right? And it just right. I mean that is, and I'd be interested how many people bank with the bank that effectively had the least amount of barriers for them to get going with, as opposed to any other reason. Now, when it comes to trading platforms and that sort of thing, brokerages, obviously, it's a slightly different
story.
But even now, I mean,
but as we said, the banks shouldn't be in trading.
Exactly. Yeah. But I'm saying, I mean, in terms of where the vast majority of my money is at. I mean, that is a decision to be made. But yeah, for the bank, where where the paycheck's going to deposit. My only thought, Hamel, on the bank term funding program is they had a missed opportunity to call it something like the Bank Term Funding Directive or something like that. So that would be BTFD. I'll put that in chat. And for you traders, you will know what buy the F and D means. Buy the F and dip. I think that is a missed opportunity to name a program.
Yeah, there should always be some thought put into acronyms and names.
There should be. Yes, there should be. It should have been in. It should have been. I mean, that would have been hilarious if the Fed or the Feds come out and like, well, we're going to signal that you should buy here by naming our program "Buy the fucking dip." Oh
man, I'm all for hacker culture naming things.
Yeah.
This should be political pressure.
What do you think about like that what country was this that put the decision for the boat, the name of the boat, up to public
did they
up to public decision?
It all depends on their culture. New Zealand put our flag up for a referendum, and we got the most boring results picked, so we ended up not changing it. The problem is that the black flag with the silver fern, which is like proprietary, owned by the All Blacks, our rugby team.
Yeah.
And so they weren't prepared for it to be the national flag, but there were variations to design with that. And do you know what happened during the referendum? This is the previous government before Jacinda Labour Party, previous national government, Conservative government. The decision was we better not have a black with a silver or white fern flag, even if it's not based on the All Blacks. Better not have that because it looks like the ISIS flag. Oh, it's completely crazy. It would have been so cool to have a black and white fern flag.
So did you guys just keep the flag though?
We just keep the friggin' the Union Jack in the corner. Lame.
Okay.
Anyway. There was an interesting episode of The Big Bang Theory where Sheldon did fun with flags, and he actually mentioned the New Zealand flag referendum, hoping that those crazy Kiwis do something with their flag.
So I looked it up, old versus new. Oh, so they never did change the flag.
No, not yet. No, we didn't change the flag.
Oh wow, some of those proposals were really cool.
Yeah, some of them were okay.
Okay.
It's just a shame we couldn't use the All Black one, which is really good looking. And our Olympic athletes wear the All Black silver fern. So I don't know why we didn't change it. Jeez. Anyway,
Boaty McBoatface was the name of the boat from the UK. That's the name of the boat.
The boat. When you say boat, is that like what?
It's
America's Cup or something?
No, it was an autonomous underwater vehicle. They put the vote up to the the population of the UK, and they came up with Boaty McBoatface. And they went with it too.
Okay.
Yeah.
Bit of the Scottish, bit of the British, bit of the others. The haka, yeah. I used to be able to do a proper haka, but I got a bit out of practice now. So
what's a haka?
I won't be doing that live stream.
I feel so uncultured, guys. I feel so uncultured. Haka is the ceremonial dance. Okay. I've seen this. They do this before the rugby matches.
Yeah. It's a Maori, kind of a war dance.
Yeah.
Although the origins are that some dude came out of the ground, got dug up out of the ground, and then did it as a thing
display. Anyway, yeah, it's pretty cool. It's pretty aggressive.
Yeah.
And a lot of the other rugby nations kind of resent it, but it's such a long-standing tradition for the All Blacks that it's almost it's a thing of its own now, and it's like New Zealand have earned it, right? I mean, we're a small, really small nation, and we have no right to be the dominant rugby nation, and eventually we're not going to be because of professionalism. But I mean, the British have a huge amount of resources, and even the Aussies, and probably soon the Americans. I don't know. Depends if there's enough money in it for them. Probably not. But I mean, for the size of our nation, we're just the most awesome rugby players in the universe, and so we've deserved the haka, I think, and it'll probably be enduring. That's pretty cool. I mean, this is different to most other sports. I don't think there's an equivalent of it anywhere. I mean, in internationals, you usually have the anthems going, but the haka is something totally different. It's cool, and gives a bit of a buzz and excitement, and the opposition get to kind of walk up and confront the haka, or they can do what others have done. Some have done in the past and just totally ignore it, like go into their own little huddle and like be totally disrespectful, which is cool. It's cool in a way too. It's like, it's a good little pre-match sort of hyping thing.
Yeah. Good stuff. We've hit on a lot of topics. I'm starting to hit that point where I'm just getting tired, to be quite honest, and I don't know what's going to come out of my mouth next.
if you follow cricket is one of the other big sports in New Zealand.
Yeah, cricket.
We just had the most amazing game against the English.
Yeah,
probably one of the most exciting Test matches in history. Like, went down to the last wicket, and so yeah. If anyone wants to message me about any of that stuff, go ahead. But I just suggest you go on YouTube and check out highlights. It's pretty cool stuff. And if you do get the chance to follow any rugby, let me know what you think about it. I think it's just so much more exciting than your American version. And if you get into it, it's pretty cool. And the sevens, check out rugby sevens if you haven't seen that before. That's a 10-minute halves, or in the pre-finals rounds of the competitions. Like, you have competitions that can go for 2 days on the international circuit, and it's like a round robin tournament. Each game is only 20 minutes, and so you get through all the preliminary rounds and knockout rounds pretty quickly, and it's so exciting. Preliminary rounds are like 7 minutes aside, so it's only 14 minutes for the game, but it's totally exhausting. It's like, 7 people per side chasing each other around the paddock. It's high velocity, and the score can change rapidly. It's a pretty cool game. But yeah, anyway, it's a bit off topic.
What's the view?
Yeah, they play hockey in New Zealand too, for sure. But
what's the viewership on something like that? What are the peak rugby matches?
I don't know, they're pretty good.
Okay.
Oh, it's enough. It's enough to obviously enough to drive revenues.
What do the top rugby players make? Like, what would be a major?
Yeah, probably not very much compared to other professional sports. Probably, to be honest, I don't know, but in New Zealand or in South Africa, England, they make a really decent living. It's a very high paycheck at the top level.
Looking up largest rugby salaries.
Yeah.
Oh, I put in.
At least in New Zealand terms, it's a high salary for New Zealand. Probably not for a lot of other professional sports. Nothing near the NBA or NFL. That's just a completely different stratosphere. I learned this very quickly when I was working in the USA, just looking at the college football, and the 90,000 people in a stadium for just college football.
Yeah,
it's insane.
We love our college football.
We don't get that for an All Black game here because we just don't have the population, and that's for an All Black game. The premier rugby team in the world can't get what you get in a college football game. So that would adjust your expectations of a professional rugby player's salary, I think.
appropriately.
So it looks like
It's insane what you can do in the USA.
1 to 2
I'm
million,
so jealous.
1 to 2 million US dollars might be where the rugby caps off
Right.
at. Okay, and that's like
Yeah.
for the UK, for like the European stuff. Okay.
Yeah, and football, or what you guys might call soccer, yeah, it's much higher pay.
Oh,
'cause
yeah.
you've got far bigger crowds and ad revenue and all that, and international games. So, but rugby is cool. Yeah, it's pretty scary, but you know, if you play as a kid, you learn how to tackle properly. So you know, we've managed to keep injuries fairly low. And it's the excitement and adrenaline of playing rugby. It's gut busting. I tell you, you ever go and play rugby, even just touch rugby, where you know, a lot of social rugby is touch or tag. So you just touch someone rather than having to tackle them.
Yeah.
So it's more of a start-stop game.
Yeah.
But even that is not really buggering. You have to be really fit and fast. And so it's a great adrenaline rush. If you're younger these days, yeah. I used to play a lot of cricket. My back and shoulders are really screwed up because I was a fast bowler, and it's an awkward kind of it's an awkward sort of sport to do. It really hurts your back, kills your back. Yeah.
That's why esports is the wave of the future. I'll tell you what.
Yeah. God. I just don't see the adrenaline in it. Sweaty fingers.
Yeah, the adrenaline's there. Nothing makes me feel like more of a man than when I click the mouse button.
It's gotta be a different neurotransmitter, mate.
All right, we've gone off the rails and had a ton of fun.
All right, yeah, Josh. No, we do play Aussie rules a little bit here, but it's not a big thing. No, so I can't find Aussie rules being played anywhere. So in New Zealand, we get good at sport because we specialize. So we just play rugby, cricket, netball, a few other things. We're pretty good at a lot of sports if you look at the Olympic tables per head of population. But it's like, you know, I don't know if Ty has got a Canadian analogy for this, but you know, seeing a New Zealander playing Aussie rules would be a bit like how do I analogize this? A bit like watching an American Douglas, help me. What would it be analogous to?
I don't know what to do.
Something really cringe that you just wouldn't be seen dead doing.
Well, I mean,
does that exist in the USA? USA is such a huge culture. It can tolerate anything, right?
What's the difference between Aussie rules and rugby?
Well, Aussie rules was invented by the Aussies, and probably because they're convicts and don't like the British. And it's like kicking the ball around, and you got to kick it between goalposts, but without a goalie. There's no goalie there. You just got to. But they play on these massive cricket ground ovals, so it's quite a huge field, and you kind of can pass the ball by kicking it in any direction to your teammates, and when you try to catch the ball, you can basically climb up the other guy's back. You can put your sprigs on him and kind of crush.
So I thought that was rugby. I don't know.
No, you're not allowed to do that in rugby. In rugby, you have to target the ball, and the ball carrier is the guy you can tackle. In Aussie rules, you sort of, it's a jumping and kicking game mostly. And you can run with the ball, but you have to like bounce it off the ground every few meters.
Yeah.
It's kind of cool because it's an oval ball still, so it doesn't bounce very well. So there's a bit of skill involved.
Yeah.
But it's not as cool as rugby because it's spread out. You don't have the close contact, and the structure of rugby is not quite there. But I mean, I'm told it's got a huge number of fans, and so I should probably not disrespect it.
Well, I can tell you the chat was happy that you did. Yeah, I don't know what we would kind of say that the equivalency is in the U.S. of
ballet basketball, something, I don't know.
Yeah.
Basketball and tutus. That's what it would be like if you were in New Zealand just caught playing Aussie rules.
Oh, I get what you're saying. Yeah, that you would never play that kind of variant or version of the. Okay, I'll think about it. I'll think about it.
Pussy's game.
Jeez. Wow. Oh.
Except for the bit where you climb up the other guy's back to try and get the ball.
Yeah,
that takes some skill.
Yeah.
Also, it's an expansive game, so you have to be really quite fit to play Aussie rules.
Really, what it is, it sounds like Aussie rules is kind of like what Valorant is to Counter-Strike in the video game world.
Okay.
Yeah. I
take your word for that.
Although I do play Valorant, because Counter-Strike's littered with cheaters.
But the one that takes the cake is American football. All the steroids and crash helmets and things. It's like
the crash helmets, steroids. You don't think your guys are on steroids too? Sheesh.
No, they're not on steroids.
Yes, they are.
Steroids would like mess them up. And,
no, they're on steroids.
If you look at their physiques, you can tell they're pretty not on steroids.
No, they're not on like necessarily purely anabolic steroids, but I guarantee that any game
I think
that you can benefit via some sort of endurance boost.
Yeah, probably performance boosting. I don't know. I mean, it's certainly very tiring and buggering because it's constant. Not many stoppages and
Yeah.
And so you're running 10K race plus high impact tackling and sprinting, and so there's probably a bit of oxygen.
Doping.
So,
I would imagine that any sport would benefit from that. Yeah, I mean, you can look at like the NBA players in the early aughts. I don't know if let's just put it this way, when performance enhancing drugs, a la like in the vein of like Barry Bonds, right? You're just getting super bulky. Right. You saw the biggest NBA stars all taking human growth hormone, right? I mean, all of a sudden these guys just became massive, and then the game completely shifted to a game of speed and agility, and then all of a sudden the big names they just shed weight, right? Like LeBron James one year lost like 60 pounds or something like that, right? Because the game changed and bulk just wasn't in advantage, and it's like, how the hell do you go from adding on 50 pounds to then dropping 50 pounds? Yeah, Barry Bonds was my favorite. I still think I think steroids should just be made legal and cough go. Yeah, Miami Brown. Yeah, HGH can do some amazing things to your jawline, and there are quite a few NBA players that now have beards full time. So that's my theory, and I'm sticking to it. I'm not. We'll never know, but
you do need more speed and aerobic capacity in rugby. So bulking up is going to have decreasing returns eventually. So.
Yeah, Peyton Manning. See, I don't know. I mean, Ken Griffey can obviously get away with saying he was never juiced, and I would imagine he wasn't. I mean, there's no evidence just in terms of his physique to think that he was, but I don't know. The Peyton Manning thing, I don't think anyone would have. I mean, that guy's neck was held on by like a spaghetti noodle. I mean, it is all that guy's neck consisted of. I don't think anyone would. I don't think anyone would take anything away from Peyton Manning that he had to take HGH. I mean, the dude's head was barely hanging on. It just, it
was basically a life-preserving mechanism.
I mean, if he wanted to ever play football again to recover from the surgery, he had to. And then he said it was his wife. Yeah, it was for his wife. Yeah. Then he's like, oh no, that HGH was for my wife. God, talk about taking one for the team, man. I don't know. Hey babe, I'm gonna pin my steroid use on you. You all right with that? Quite the romantic. Yeah, we can start a sports live stream. That's a good idea. That's it. MMTers talk sports. We've solved economics. Now we're gonna solve sports. Actually, there is some cool research being done with deep learning in athletics, and that's going to be an interesting frontier. So one of the things that in deep learning that they've tried to that's just difficult is to, like, you can create like reinforced learning for 2-dimensional games or even 3-dimensional games, but the minute you try and abstract to games like soccer or rugby, right, it becomes really difficult because you also need the agent themselves to be properly modeled to act like an agent, right? Playing a game, and you know, some
you mean an electronic game of this?
No, like literally creating, like, you know, because what you'd want to do, like, they've actually come up with some really sophisticated stuff. I mean, it's kind of amazing, at least in soccer. What you'd want to do is create a deep learning model that creates you know, real agents, right? The actual functional agents that have all the characteristics of a human being, and see if you can train them in a deep learning model to play soccer, you know, 3-dimensionally, right?
Okay.
And see what strategies come up, right?
Okay.
But the problem is, yeah, go ahead.
Right.
Yeah.
Oh yeah, just trying to get an idea of how it was going to be applied.
Yeah, to try and just
strategy. So you've got your team of players. You can maybe model them
exactly
to figure out a good strategy to beat the opposition. Because at the moment, like, the All Blacks would be doing video analysis and stuff like that.
Exactly.
So it's all human.
Exactly.
Human analysis.
Exactly.
So you're saying there's mileage to be gained from
from deep learning. Yeah. And so I forget what they call the process of creating, you know, human 3-dimensional models that can then be put into deep learning models to then get put into reinforcement models to come up with, you know, some
crazy ideas.
Yeah, some crazy ideas. And that's always been the trick is getting is modeling how a human would interact. And they're finding a ton of the leaps. They're just making some amazing strides in that area.
Yeah.
Which is where I think
you've got to model the opposition as well to do that.
Yeah, well, what you would do, this would be my guess, is what'll end up happening is it would be, if it's a zero-sum game, you'll end up creating a strategy that's entirely unexploitable, right? So you would effectively always be playing for a tie at all times, and just hope that your opponent makes a mistake that you can exploit in the meantime, right? I mean, that would be my guess. Is to eventually,
it's just the trouble is when the rubber hits the road, you know, in a real game of rugby, when someone's running at you, you know, like Jonah Lomu or someone, all the theory gets thrown out the window.
Yeah, absolutely.
You have to think about, okay, what the AI told me I'm supposed to do in this scenario.
Yeah,
it's like, nah, that slows down your thinking. So it all has to be prefrontal cortex. That's the trouble with live sport.
Yeah, which is what makes it fun.
Telling my daughters, you know, sport is just so much cooler. Why are you into this ballet and opera stuff? You know, you know what's going to happen.
Speaking about knowing what's going to happen, in my home state of Michigan, they're trying to get WWE, the scripted wrestling, onto the betting app, the betting apps.
Oh, wow.
Yeah.
That would be crazy.
Yeah.
That's incredible. That's like betting on the opera.
Yeah. It's like going to the movies. They're going to see Titanic and making a bet if the ship sinks or not. Like,
Oh,
10 to 1 that
bookie on it.
That Romeo and Juliet die.
I don't know. You know, maybe it'll make the WWE a little bit more random. I don't know.
This will get some
might be the game. I don't know. Yeah.
Oh man,
that's funny.
We have absolutely gone off the rails. I can only imagine. I can only imagine what the retention is going to be when this thing finally gets published. But we've had it. We've had a good one. I can hear the can cracking open right now and the window breaking for Stone Cold. Yeah.
Oh well.
I think
thanks everyone.
I think we're going to put a bow.
Good
questions. Put a bow on this one. Yeah, it's been another great week.
As usual.
Thanks for coming to. Thanks for coming to hang out.
Me beyond my domain of expertise. Hope you got something out of it, and thank you, Douglas. It's always good to get your analysis. Man,
do you have an outro for tonight, or do you want to just?
It's got so many Powell ones. I have to think of a new one.
All right.
Maybe I could do. I've mentioned Rowan Gray. So it'd be something like crazy crypto hooligans, Doug Watt, will the Columbia Crusader, Rowan Gray, defeat the private payments layer greenhouse effect and restore social justice with a wave of a central bank digital currency? Or will the people of Gotham continue to toil under the banking proposals pre-Mosler? Find out next week on the Daylight Savings MMT New Time main MMT channel. Bye, everyone.
Hey, thanks for joining us tonight, everyone. We will see you next week. Have a good night, everybody.